Welcome to your daily solo 401k webinar Q&A session with my solo 401k financial, where we help you to stop overpaying taxes and start building real retirement wealth. Today's topic, how late can you set up a solo 401k? Here we are in the middle of November, and we're approaching the December 31st deadline for some types of contributions. So if you're self-employed, consultant, realtor, freelancer, side hustler, S Corp owner, today's topic might literally save you thousands of dollars in taxes and unlock up to $70,000 plus in solo 401k contributions for tax year 2025. Why does this matter? Well, every year, thousands of business owners miss the solo 401k deadline because they think they are too late. But here's the truth. The deadline is way more flexible than most people realize. And depending on your business structure, you might still be able to set up a solo 401k even if you think you've missed the cutoff. So this is your chance to get answers. Use the chat to ask questions on today's topic or anything else. Type them over now so that we can be sure to get to them all. Looks like we've got some questions already here. So again, today's topic is, how late can you set up a solo 401k? Looks like we've got a question here from Lee. Thanks for all the great resources. I watch and read lots of your information. I have specific questions about my situation I wish to ask. Have them right now. What's the best way to ask? Great question. If you have a lot of questions that you think are elaborate, meaning we need to go in depth, then you can go ahead and submit an email to business@mysolo401k.net with your questions, and then we can set up a time to go over those questions with you. Now, if you have some questions that you want to ask now that are pretty repetitive, I'll be happy to answer them as I field questions every day. So no problem. I'll let you decide how you want to proceed on with that regard. All right, let's continue here. So again, let's really break down the solo 401k setup deadline. So there are different rules that apply, just like everything else in the IRS code. It all depends on ifs, whats, and whether you're opening up a solo 401k plan versus an IRA, whether your business is taxed as a sole proprietorship, partnership, or S corporation, for instance. So those types of items matter with regards to a solo 401k. That's, in other words, how your self-employed business is taxed. So let's hone in on the different entity types, and then we'll also talk about the contribution types with respect to deadlines. And then, of course, the popular mega backdoor Roth and mistakes to avoid. And go ahead and, as I mentioned already, type over questions and we'll get to those as we cover today's topic. So if your self-employed business is a sole proprietorship or an LLC tax as a sole proprietorship, you have a favorable deadline with regards to how late you can open/set up a solo 401k. So if your self-employed business is taxed as a sole proprietorship, then you technically have until April 15 of tax year 2026 to both open the solo 401k plan and make the contributions for tax year 2025. Yes, you heard that correctly. You're going to be able to make employee contributions, employer contributions, and voluntary after-tax solo 401k contributions for tax year 2025 if you wait to open the solo 401k plan by April 15 of 2026. So I recommend not waiting until then, obviously. Here we are in November of 2025. You still have plenty of time. But those that miss the deadline, or I should say those that don't set the plan up by December 31st, it's good to know that if you're a sole proprietorship or if your business is an LLC tax as a sole proprietorship, you have until April 15 of tax year 2026 to both open and make all contribution types to the solo 401k plan for tax year 2025. Now, let's say you missed that April 15 year 2026 deadline. Well, then you can open the solo 401k plan by October 15 of 2026 if you file for an extension for your business, a business tax return extension. Well, if you're a sole proprietorship, that means you filed a personal Form 1040 extension, and that's going to allow you to just make employer contributions as well as voluntary after-tax solo 401k contributions. You will not be able to make employee contributions. So again, it's going to be best to open the solo 401k plan here by December 31st of 2025, so you don't have to try to remember to open that plan by April 15 of next year or by October 15 of next year, in which case you wouldn't be able to make all contribution types. So again, this exception only applies to sole proprietorships, the exception of being able to wait till April 15 of the next year to open a solo 401k for the prior year so that you can make employee contributions. And if you wait till October 15 of next year, you're only going to be able to make employer contributions and voluntary after-tax solo 401k contributions for tax year 2025. So yes, it's a little quirky, but you've got our great Congress to thank for that when it passed the Secure Act 2.0. All right, now if we're talking about a self-employed business that's an S Corp or partnership, the rules are different than they are for a sole proprietorship. So if you want to preserve the right to make employee contributions to the solo 401k plan for tax year 2025, you're going to need to set up the solo 401k plan by December 31st of this year, which is 2025. Now, keep in mind that setting up the plan simply means that you need to sign the plan documents. Those plan documents, among other documents, include the adoption agreement and trust agreement. You simply need to sign the adoption agreement by December 31st of 2025 so that you can preserve the right to make employee contributions in 2026 by your business tax return due date plus timely filed extension for tax year 2025. Now, if you wait until January 1st or after in 2026 to open the solo 401k plan and your business is an S Corp or a partnership, then you're only going to be able to make employer contributions and voluntary after-tax solo 401k contributions, and you're going to need to open that plan by your business tax return due date plus timely filed extension. For example, if you're an S Corp, the due date for the S Corp return is typically March 15. So by March 15 of 2026, you could open the solo 401k plan and you'll be able to make employer contributions and voluntary after-tax solo 401k contributions for tax year 2025, but you will not be able to make employee contributions. If you file a business tax return extension for that S Corp, you get an extra 6 months. So March, you add 6 months to that, it would be September 15 of 2026. You would need to open the solo 401k plan by September 15 of tax year 2026. And you're gonna also have to make contributions by that date. Both employer and voluntary after-tax contributions can be made by that date. If it's a partnership, same scenario, except that, well, a partnership, the tax return due date is also March 15. So it's the exact same deadline. So in short, if your business is taxed as an S Corp or partnership, you're going to need to open the solo 401k plan by December 31st of tax year 2025 if you also want to be able to make employee contributions for tax year 2025. Otherwise, if you wait till January 1st or after and by September 15 of 2026, you're only going to be able to make employer contributions and voluntary after-tax solo 401k contributions, not all three types. If you open the solo 401k by December 31st of 2025, then you can make all three types: employee contributions, employer contributions, and voluntary after-tax solo 401k contributions. Okay, it looks like we've got some questions here. Let's take a look at some of those questions and then we'll come back here and pick up where we left off. So, how much are the fees to set up a plan with you? Good question. That information is made public right there on our website. Let me share that link with you, and then I'll also go over the pricing. It's very straightforward. Our pricing schedule is very simple. You can't get any simpler than the following. There's a link to that pricing page. So for the first 12 months, our fee is $650. So if you set up a solo 401k plan here in November, for example, of tax year 2025, the fee is $650, and that's going to cover you all the way through November of next year, so 2026. Next year in 2026, we will invoice you for the following 12 months our annual fee of $125. It's that simple. So take a look at our pricing page. I just shared that with you. And what's great about our pricing structure is that we'll take care of Form 5500 easy filings for you, Form 1099 reporting at no additional cost. That's all covered in our annual fee. You just need to make sure that you request that service from us. And just be mindful, there are some companies out there that like to do reviews about our company, and they falsely like to try to compare their plan with our plan. And one thing I've noticed is that they'll say, well, they won't file Form 5500 easy and Form 1099R for you. Well, yes, we will. It's right there on our pricing page. It's all over our website. You just need to make sure you timely request it. And I suspect that companies like that like to provide that false information because they're charging a heck of a lot more than we're charging on an annual basis. So they're trying to justify their higher fees. Great question. Okay, let's see here. What other questions we have? What are the benefits of having my solo 401k? I'm a real estate investor. I know that I can use the solo 401k to be my own bank. What are the benefits? Well, a solo 401k plan has many benefits, and we've actually performed webinars on this topic, so I'm not going to go over every benefit. If I go over every benefit of the solo 401k, I'm going to be on it for 3 hours. That's how many benefits the solo 401k has. But in a nutshell, a solo 401k plan allows you to make high annual contributions. For example, for tax year 2025, you can contribute as much as $70,000 if you're under age 50. If you're age 50 or older, you might be able to contribute $77,500 and even all the way up to $81,250 if you're 60, if you're age 60, 61, 62, or 63. And then for tax year 2026, those annual contribution limits are up. It increased from $70,000 to $72,000. So a solo 401k, and if you make enough net self-employment income, you can reduce your taxable income for the year by making those contributions as pre-tax contributions. So one of the main reasons Congress created 401k plans, including solo 401k plans, is for individuals to save for retirement, and they can do so, if they wish, by making pre-tax contributions. Another benefit of the solo 401k plan is that you can borrow from the solo 401k through a participant loan, where you borrow from your own plan and you pay your own plan back. Another big feature of the solo 401k plan is when you invest in real estate and you want to utilize debt financing. Let's say your solo 401k doesn't have enough funds to purchase a particular rental property. Well, the solo 401k can go out there and get a non-recourse loan and use those borrowed funds along with other funds in the solo 401k to purchase that rental property. And that's not going to trigger what's referred to as unrelated debt finance income tax, which is a tax that applies to self-directed IRAs that utilize debt financing. Another huge benefit about the solo 401k plan is that it's a way to get more Roth solo 401k funds in your plan versus a Roth IRA. For example, if you utilize the Mega Backdoor Roth solo 401k strategy, you can contribute the entire $70,000, which is the maximum annual contribution known as the 415 limit for tax year 2025, to the voluntary after-tax solo 401k and immediately convert that to the Roth solo 401k. Therefore, you indirectly get a total of $70,000 in Roth solo 401k funds in the plan. And then you invest those Roth solo 401k funds in equities or real estate. All that rental income or dividends will flow back to the plan and go tax-free. So again, those are just some of the solo 401k benefits. Good question. Okay, we have another question here. How do I take distribution from my solo 401k? Just withdraw the amount using check and generate Form 1099-R for withdrawal amount. Do I pay taxes up front? Would they be covered in yearly taxes? Well, that's a good question. We've actually performed a webinar on this topic as well. If you subscribe to our YouTube channel, where we have close to 1,000 videos, you can locate a video that we've done on this particular topic. But when you make a distribution from the solo 401k plan, you have to meet a triggering event. In other words, it's not considered your piggy bank. You can't treat your solo 401k as a piggy bank. You have to follow IRS regulations. So a triggering event when you distribute funds from a solo 401k plan is you typically have to be age 59 and a half or older. And that's not a regulation put on by my solo 401k financial. That's an IRS statutory regulation. So if you want to distribute funds from your solo 401k plan, you typically have to be age 59 and a half or older or no longer self-employed. So you first need to make sure you meet that triggering event. There are other triggering events. For example, if you've transferred IRAs or former employer plans to the solo 401k plan, those can be distributed at any time. However, when you make a distribution from a solo 401k, whether you're distributing funds that have been in there for a while, or if you're age 59 and a half or older, you're always going to have to pay federal taxes. There's no way around that if we're talking about a pre-tax solo 401k funds. Now, if you're over age 59 and a half, you don't have to pay a 10% penalty. Now, that's different than federal taxes. If you're under age 59 and a half and you meet a triggering event, not only do you have to pay federal taxes, but on top of that, you have to pay a 10% early distribution penalty. Also, regarding paying taxes, when you take a distribution from a solo 401k, Uncle Sam wants to have the tax revenue now. So you're going to have to pay 20% of federal taxes to good old Uncle Sam now, and you're going to have to submit that to the Department of the Treasury. So you're going to have to sign up with the Department of the Treasury to pay that 20% tax. So you're only going to receive 80%. So if you take a $1,000 distribution, you only get $800. The other $200, you got to wire it to the Department of the Treasury, which is going to count towards your tax payment for the year. You still may have to pay more taxes because it could bump you into a higher tax bracket, or you might get a partial refund. But anytime you make a distribution from a pre-tax solo 401k, it's treated as if you received a paycheck, meaning that it's going to be subject to the income tax rates. Now, if you qualify to make a solo 401k distribution, and you don't want to finagle with having to pay Uncle Sam a 20% federal tax now, because you're the one that's going to have to sign up with the Department of the Treasury as a taxpayer. They're going to give you a login information. They'll mail you a PIN. Then you got to link it to your bank account, and you got to wire the money. If you don't want to go through all those shenanigans, then consider transferring part of the solo 401k funds to an IRA and making the distribution from the IRA instead. So I said earlier, this is a topic we've covered. It's hard to cover it all in one session. I'll be on the phone for an hour, on the webinar for an hour, just talking about that topic. But that should give you enough information. But you still have to meet a triggering event. If you want to find out more about your distributions options, go ahead and submit a support ticket, and we'll gladly send you those regulations. All right. Another question here. We are a sole prop LLC filing Schedule C in 2025. Prefer not to run formal payroll process. Just want to pay ourselves once this year the entire net income as an owner's draw. Do we need to run typical payroll paperwork to back up the employee deferral election? Or will our P&L be sufficient substantiation to the IRS that we are doing contribution our entire 401k income in the solo 401k account for both husband and wife? Exactly. We're not talking about a traditional 401k, which is a 401k offered by a big company that has W-2 employees. For example, we're not talking about the Walmart or Best Buy 401k. We're talking about a solo 401k, which Congress created for the self-employed to make it easy for individuals to not only save for retirement, but to handle compliance matters. Therefore, yes, you're not required to have formal payroll in order to contribute to a solo 401k like you typically do with a full-time employer 401k. Most of our clients pay themselves once a year, and then they make their contribution for the year. And oftentimes they'll wait to make the employee and the employer contributions by April 15, or if they file for an extension by October 15 of the following year. For example, if you already have a solo 401k, or if you open a solo 401k plan here in 2025, and let's say you pay yourself the full amount for the year on December 25th, 30th, or whatever, or 31st, you're going to be able to make both employee and employer contributions for tax year 2025 next year in 2026 by April 15 or October 15 of tax year 2026 for tax year 2025. So no, you don't have to do any formal payroll. You just need to make sure that you report the necessary self-employment income to justify the contribution amount. So in your case, if you're a sole proprietorship, you're going to want to make sure you file a Schedule C, and your contributions to the solo 401k plan would be based on line 31 of your Schedule C, which is the net self-employment income line. You can plug that figure into our calculator. Our calculator will run the calculation for you. Or if you're a client of my solo 401k financial, we'll gladly run that calculation for you as well as other scenarios. All right, let's see what other questions we have here. Question 2 related to the above. Is there a form that used to be filed or kept each year by husband and wife to indicate the employee deferral election? No. Again, we're not talking about a traditional 401k. We're talking here about a solo 401k. So the administration is much simpler. Instead, the annual contributions are reported on your business tax return due date. On your business tax return. So if you're a sole proprietorship, it's going to be reported on your Form 1040. It's going to be on Schedule 1, line 16 specifically. Let me pull up our annual contribution post here. So again, you don't have to fill out any type of contribution form, any type of salary deferral form, because this is a solo 401k. It's not a traditional 401k, because here you're the trustee of the plan. So there's the link to a page on our website that goes over how to report contributions. So they're reported on your business tax return, and the contributions themselves are actually tracked within the solo 401k holding account, the bank or the brokerage account. All right, let's continue with our webinar here, and we'll come back and take a look at some more questions. So we're talking about how late can you set up a solo 401k plan. Now, if this information is helping you feel more confident about your future, please take a second to like and subscribe. It tells the platform this content is valuable, which helps other solopreneurs like you to find it. Subscribing guarantees you get live notifications and when we go live every day. And we deliver information every day to help you secure your retirement. Please also subscribe to our YouTube channel, as I mentioned earlier. You can also visit our My Community, where we have over 30,000 members. That's free to join. If you're a financial professional, you can even post guest blog posts. So whether you're a CPA, tax professional, real estate agent, broker, financial planner, attorney, CPA, you name it, you can post guest blog posts on our community, and you can link that information back to your website so that 30,000 plus of the eyeballs in our community can view your services, and they might reach out for your services. So it's a growing community. There are also lots of forum posts out there. We actually just posted a response to a forum post this morning where an individual was asking a timely question regarding the having to make catch-up contributions to the Roth Solo 401k instead of the pre-tax Solo 401k plan starting in January of 2026. That's the mandatory super catch-up, the normal catch-up contributions that have to go to the Roth Solo 401k. They can no longer go to the pre-tax Solo 401k, but it only impacts S Corps and C Corps. It doesn't impact those who are self-employed as a partnership or as a sole proprietor. So take a look at the My Community. There's great forum posts out there on all kinds of topics. Okay, let's continue here, and we'll take a look at some more questions here in a moment. So we're talking about a timely topic right now, which is how late can you set up a solo 401k plan? So we already went over this couple slides here. Here's a good question here that we get. What if you didn't pay yourself W-2 wages? Can you still do mega backdoor Roth? Is it too late if taxes are filed? How late is too late? Well, when your self-employed business is taxed as an S corporation or a C corporation, or an LLC taxed as an S corporation, or an LLC taxed as a C corporation, as we already discussed earlier, we talked about the deadline. So you're going to want to set up that solo 401k plan by December 31st of tax year 2025, so that you can preserve the right to make all contribution types, including employee contributions. Otherwise, if you wait to open the solo 401k on January 1st of 2026 and after, you're only going to be able to make employer and voluntary after-tax solo 401k contributions. Now, if we're talking about an S corporation, contributions to the solo 401k plan are based on your W-2 wages from that S corporation. So you have to have enough W-2 wages from your self-employed S corporation to justify making any type of contribution to the solo 401k plan, including the mega backdoor Roth solo 401k. Now, regarding the wages, the contributions to the solo 401k plan for tax year 2025, they're going to be based on your W-2 wages from January 1st through December 31st of tax year 2025. And you're going to be able to make those contributions to the solo 401k plan in tax year 2026 for tax year 2025, as I mentioned earlier, depending on those deadlines. So you want to make sure that your CPA or your payroll provider will provide you with the W-2, and most payroll providers and CPAs will provide the W-2 for the prior year by January 31st of the following year. Some will do it sooner, but you want to make sure that that W-2 lists all the W-2 wages for the year that were generated from January 1st through December 31st of tax year 2025, for those that want to make contributions for tax year 2025 to the solo 401k. And again, you're going to have until next year in tax year 2026 to make employee and employer contributions, as well as voluntary after-tax solo 401k contributions. If you set up the plan by December 31st of tax year 2025, and setting up the plan is much easier than you may think. Setting up the plan in the context of the IRS regulations means you simply need to sign the plan documents. And then you'll have until next year to both open up the bank or brokerage accounts, get the EIN number for the plan, and make the contributions. All right, so let's take a look at some more questions here, but let's talk about eligibility requirements. Because in order to open a solo 401k plan, you have to be self-employed. So a solo 401k is for owner-only businesses. You cannot employ any non-owner full-time W-2 employees who work 1,000 hours or more in your business. You can exclude those who are age 21 or younger. Anyone who's under age 21 can be excluded from the plan, regardless of how many hours they work. So you would still be able to open a solo 401k plan, even if you hire someone who's under age 21 that works 1,000 hours or more, because those individuals, those employees can be excluded. Okay, let's see here. Looks like we've got some more questions here. Give me a moment here. Here we go. I'm the only employee, but I pay myself a W-2. Do I qualify? Do you file the trust? I'm 65 and may want to make some money out next year. What are the implications? So you need to be self-employed in order to open a solo 401k plan. So if you're self-employed and your business is an S corporation or taxed as an S corporation, then you can certainly open a solo 401k plan, because a solo 401k is for owner-only businesses that don't employ any full-time W-2 employees who are not owners. So a lot of S corporations, the owner works 1,000 hours or more or less. That's fine. That 1,000 hour threshold applies if you hire someone who's not an owner in your business. And if that individual who's not an owner, that's referred to as a common law employee. If that individual works 1,000 hours or more in your business, then you would not be able to open a solo 401k. But if the owner works 1,000 hours or more or less, he or she can open a solo 401k because he or she is an owner. And we do set up solo 401k plans here at my solo 401k financial. A solo 401k is also known as a retirement trust. You can go to our open account page to open the solo 401k plan with us online. And since you're age 65, you're going to be able to contribute, provided you have enough W-2 wages from your S corporation self-employed business. You can contribute as much as $77,500 for tax year 2025, and you can do that next year in 2026 by your tax return due date plus time we file an extension. That's because you're over age 50 and you qualify for the $7,500 catch-up contribution, hence why you can make the $70,000 contribution plus the $7,500 contribution for a total of $77,500. Good question. Adequate wages? Well, when you contribute to a solo 401k plan, you have to contribute based on your net self-employment income. So it takes money to contribute, right? If you don't have any earned income from your self-employed business, then you cannot contribute. If you've got minimal earned income from your self-employed business, then you can contribute some, but not the overall limit. So in order to contribute to the solo 401k, you have to have the necessary earned income from self-employment activity. You can be part-time or you can be full-time. What is the $1,500 tax credit? Good question. Let's pull up some slides on that. So the $1,500 auto contribution credit is only available to 401k plans. It's not available to IRAs or SIP IRAs, or simple IRAs. It's only available to solo 401k plans. That's number one. The auto contribution credit, it's a dollar for dollar tax credit equal to $500 per year for a total of 3 years. So it's a total of $1,500. It's spread out over a 3-year period in $500 increments. If you're self-employed and qualified for a solo 401k plan, you have to open a solo 401k plan from a provider whose plan has the auto contribution credit built into it, along with the applicable schedules. Here at my solo 401k Financial, we provide such a plan, and as a matter of fact, we were the first in the industry to offer such a plan. Typical providers like brokerage firms and banks do not offer such a plan. So that's number two. You need to make sure you open a solo 401k plan with a solo 401k plan document provider like my solo 401k Financial that has the auto contribution feature built into it. Now, don't confuse the auto contribution credit with the tax credit. As a matter of fact, let me pull up a good post that we did on that you can share with your CPA, because a lot of CPAs confuse the tax credit with the auto contribution credit. The tax credit is not available to solo 401k plans. It's only available to traditional 401k plans. However, the auto contribution credit is available to solo 401k plans, and that's where the confusion lays. Give me a second here. Let me pull that up here. So we did a guest blog post on the White Coat Investor on the tax credit versus the solo 401k credit. Let me share that link with you. And especially if your CPA asks about this come tax time. So take a look at that link right there I just shared with you, and we'll continue talking about the auto contribution credit. So the great thing about the auto contribution credit is that it's available to existing clients as well. It wasn't available till January 1st of 2024 and after. So if you are a client of my solo 401k Financial and you open the solo 401k with us on December 31st and prior, then we can add the auto contribution credit to your solo 401k. You just need to submit a support ticket through our website, and we'll add the auto contribution credit to your plan so you can start claiming that credit now for over 3 years. So both new clients and existing clients qualify. Likewise, if you have a solo 401k with an outside provider, you can move that solo 401k to my solo 401k Financial. That's called a restatement. And we can include the auto contribution credit to your plan, and you can start claiming it now in $5 increments over a 3-year period for a total of $1,500. So give me a moment here. I'm going to share that support page link with you. So here's the support ticket for existing clients. If you're a new client, we'll add that to your plan automatically. This would be if you're an existing client, we would add that credit, auto contribution credit to your plan, and you'll be able to start claiming that credit for this year and over the next couple of years. Okay, let's keep talking about the auto contribution credit. So even though it's called an auto contribution credit, you're not required to make contributions to the solo 401k plan. So essentially with these credits, the cost to both open and maintain a solo 401k for many years to come is practically free. And what's great about it is that it's a dollar for dollar credit. So it reduces your taxable income on the business side on a dollar for dollar basis. And once we add this auto contribution credit to your plan, you're not required to contribute. You can opt out of contributing, and you're still going to be able to contribute as much as you want up to the overall limit. So, I mean, talk about the government throwing you a bone. It's a $1,500 auto contribution credit. You're going to claim this credit by filing Form 8881. It's an attachment to your tax return. It's a 2-page form. Doesn't take very long to fill out. If you file your taxes through TurboTax, we have a walkthrough on that. We also have a PowerPoint and a video webinar that we can share with you on how to fill it out. But you're going to fill out that Form 8881 a total of 3 times. So for 3 years. So for tax year 2025, if you open the plan now, or if it's added to your plan now, you'll be able to claim a $500 credit when you file your 2025 taxes next year in 2026. Then you can claim another one for tax year 2026 and a final $500 amount for tax year 2027 for a total of $1,500. So good question. All right, let's take a look at some more questions here. Give me a moment while I check for any other questions here. Oh, here we go. Great question. Hey, Mark, can you explain why I would need my solo 401k to help me set up a solo 401k? Why can't I set it up on my own? Great question. So in order to open a solo 401k plan, you have to use a solo 401k plan document provider. So for example, Fidelity provides solo 401k plans. If you open up a solo 401k with Fidelity, for example, they'll provide you with a copy of the IRS letter for the plan, which means that the IRS has approved the Fidelity solo 401k plan. Likewise, when you open a solo 401k with my solo 401k financial, you'll be provided with the IRS letter for the plan listing my solo 401k financial as the provider. The reason you have to have a solo 401k provider has to do with Congress. When Congress created solo 401k plans, they wrote the regulations on it, and they're required that you have a solo 401k provider. As a result, you can't just open a solo 401k on your own like you can open up an IRA on your own. So bottom line, it has to do with the IRS regulations. Good question. Okay. Any other questions here? Got another question here. We got a question here from David. Thanks so much. A couple of questions. Does the plan allow contributions that are after tax, not merely Roth or pre-tax deferrals? Does the plan allow you while still actively employed and participating to either convert the after-tax contributions within the plan to a Roth 401k or roll out after-tax portion, convert a person immediately to a Roth IRA without having to terminate the plan? Great question, and the question is yes to all of your questions. Let's break that down a little bit more. So yes, the solo 401k plan offered by my solo 401k financial has all the bells and whistles. It not only allows for loans, being able to invest in alternative investments like real estate, crypto, precious metals, as well as traditional investments, obviously. It also allows for the mega backdoor Roth strategy. And the mega backdoor Roth strategy is where you make a voluntary after-tax solo 401k contribution to the solo 401k plan, and then you immediately convert those funds to the Roth solo 401k or the Roth IRA. So here's a good slide of the mega backdoor Roth solo 401k strategy. So as I touched on earlier, the mega backdoor Roth strategy is a vehicle to indirectly get more Roth Solo 401k funds in your Roth Solo 401k over the regular limit. So with the mega backdoor Roth, you can choose to make voluntary after-tax, just make voluntary after-tax solo 401k contributions. So they would go into the after-tax bucket, the bucket meaning bank or brokerage account. And then you would convert that to the Roth Solo 401k or a Roth IRA. Most clients prefer to convert it to the Roth Solo 401k, and we've done webinars on that in the past. Keep in mind, Roth Solo 401k plans are no longer required. You're no longer required to make required minimum distributions from a Roth Solo 401k. It used to be that individuals would make the voluntary after-tax solo 401k contribution to the solo 401k, and they would convert it to the Roth IRA because they did not want to have to pay, they did not want to have to make required minimum distributions. Well, Secure Act 2.0 changed the rules, and now you don't have to take required minimum distributions from Roth Solo 401k plans either. So this slide here is an example of a one participant plan. This one here is an example of a two participant plan that utilizes the mega backdoor Roth. A two participant plan, for example, would be if both spouses are self-employed in the same business, which means both spouses can participate in the solo 401k and both spouses can each perform the mega backdoor Roth strategy. So under the one participant plan, or even the two participant plan, the plan is sponsored by the self-employed business. It's just one plan that's set up. The solo 401k plan will have its own separate employer identification number. You cannot use your business or your social security number. It's the remember, a solo 401k is a retirement trust. It's a separate legal entity. So it has its own EIN number, and we'll get that for our clients as part of the setup process. That is, we'll obtain that EIN number. Now, it's not going to be three separate solo 401k plans. It's one solo 401k plan, and you're required to have separate holding accounts. So pre-tax, Roth, and after-tax. You have to have a separate holding account for each source of funds. Same thing with the two participant plan. It's one plan, one EIN number, but you would have 6 separate holding accounts to hold each participant's respective funds and their sources. But the mega backdoor Roth strategy, one, you got to open a plan with a company like my solo 401k Financial, who has a plan that allows for voluntary after-tax contributions that can be converted to the Roth Solo 401k or the Roth IRA. This illustration here is someone that does the mega backdoor Roth Solo 401k strategy where they make voluntary after-tax solo 401k contributions to the designated account, so the voluntary after-tax bucket. Then they convert that to the Roth Solo 401k plan. Then they complete our conversion form, which is an online form that we collect information to issue that Form 1099-R. And again, we issue that at no additional cost to our clients. We'll file it with the government. So we'll issue that Form 1099-R. Once you fill out that online conversion form, you'll be in our queue to issue that Form 1099-R. So yes, to answer your question, you can convert the voluntary after-tax solo 401k contribution to the Roth Solo 401k or the Roth IRA. You get to choose. So good question. All right, let's see what other questions we have here. All right, so you're welcome. Question here. Can you roll over existing traditional IRA and Roth IRA into a solo 401k traditional Roth account? Great question. So you can always transfer a traditional IRA or a SEP IRA or simple IRA to a solo 401k. However, you can never transfer a Roth IRA to the solo 401k, even the Roth Solo 401k portion. And that's an IRS regulation, an IRA regulation to be more specific. You can look at IRS publication number 590, which is the regulation, which is the publication, the IRS publication for Roth IRAs. So you can never transfer a Roth IRA to a Roth Solo 401k. It's a quirky rule. Congress has talked about changing that rule for the last 15 years to still haven't changed it. Maybe they'll change it under Secure Act 3.0. But now, if you have a traditional IRA that has non-deductible IRA funds, you can transfer the gains in that non-deductible IRA to the solo 401k to isolate that non-deductible IRA, and then you would convert that non-deductible IRA to the Roth IRA. That's part of the backdoor Roth IRA strategy, which is different than the mega backdoor Roth solo 401k strategy. And we've done a webinar on that topic in the past. Here's a question here. Let's see here. Are after-tax contributions to solo 401k limited to self-employment net income and earned sponsoring business? Can you contribute more than the net income? So all contribution types, whether we're talking about employee contributions, employer contributions, or voluntary after-tax contributions, those all have to be based on your earned income from self-employment income from your self-employed business. Now, if you have multiple self-employed businesses, you're going to have to aggregate the contributions to the solo 401k based on all of your self-employment activity. So you cannot contribute more than you make. So if you only make $30,000 of self-employment income and you want to be able to contribute up to $70,000 of solo 401k contributions, you're not going to be able to, because you have to have the necessary self-employment income to justify the amount you contribute. Good question. Your form is saying 650. I thought you said 500. No, I didn't say 500. I said $650. You might be thinking of the form 5500. I did talk about that. All right, let's see here. Here's a question here. I joined late. If you have covered, would you be preparing Form 8881 that we need to file, or do we need to prepare on our own? So Form 8881, you need to file that, you need to prepare that with your CPA, or you can do it through the TurboTax. It's a 2-page form. It's very easy to fill out. We have a video walkthrough and a PowerPoint that we would share with you. So you only have to complete a little small section of that 2-page Form 8881. So it's nothing scary. I know some of those tax forms can be a little scary, but the Form 8881 is not scary at all. Okay. Here's a question. What bank do you use? We don't use any particular bank. That's probably why we get so many clients. Clients utilize our services because at the end of the day, it's your money. So it shouldn't be up to us as to where you hold your money. Some of our competitors will drive you to their own bank that they're getting a kickback from, or that they're in bed with, associated with. Here at my solo 401k financial, you choose where to hold your money at. So you can hold your money at your local bank, credit union, bank, big bank, regional bank, online bank, brokerage firm. A lot of our clients use Fidelity and Schwab, for example, at the retail level to hold their solo 401k funds. And that's because my solo 401k financial is the plan provider. So even though Fidelity and Schwab offer their own solo 401k, they do provide brokerage accounts for a solo 401k offered by my solo 401k financial. That has all the bells and whistles, including the $1,500 auto contribution credit, the mega backdoor Roth, loans, and so forth. So you get to choose where to hold the money at. That's great. The great thing about using my solo 401k financial, and another great thing about using my solo 401k financial, is that we never have access to your money. We don't need to have access to your money. We don't want to have access to your money. So as the solo 401k plan document provider, we provide ongoing compliance support as well. We'll provide Form 1099-R reporting for distributions, conversions, transfers, and so forth. So if you process a mega backdoor Roth conversion, or if you process a requirement on distribution, we'll issue that Form 1099-R and we'll file it with Uncle Sam for you. So that's covering our annual fee. Same thing with Form 5500 Easy Preparation. We'll prepare it for you and file it electronically for you with the government. You just need to make sure you timely request that from us. Because again, we don't have access to your funds, and we don't need access to your funds to perform this reporting. If you're opening a plan for the first time, we'll take care of helping you open up the bank and brokerage accounts by preparing the applicable bank or brokerage account forms. We'll also help you transfer IRAs, former employer plans to the account. We'll help you run calculations. If you want to make a contribution, we'll run a calculation for you regarding how much you can contribute. So bottom line here in my solo 401k financial, the only thing we're not doing here is selling you investments. We don't recommend investments. We're not investment advisors. We're not financial planners. We're compliance experts. We stick in our lane. We do what we do best. We have a lot of institutional clients that utilize altruists for their clients' accounts. They even utilize Fidelity and Schwab. They like to use our services because the advisor can do what they need to do regarding the planning side. We do what we need to do regarding the compliance side. It's a win-win situation for all parties. All right. Let's see if we have some more questions here. Here's a question here. We currently have a personal investment, Roth and rollover IRAs at Schwab. Can we set up the 401k at Schwab from Schwab's perspective? What kind of accounts are these? Specific accounts which they offer, or will it just be normal brokerage accounts? If we set up these accounts at Schwab, can they be accessible under existing logins? Great question. Let me share a good page. I'm going to shed some light on that, but I'm also going to provide a good link that talks about how that works. Let's see here. So I'm going to share a couple with you here. Here's link number 1. Take a look at that link. Let me pull up a second one here. So that link there compares a solo 401k plan offered by my solo 401k financial versus a plan offered by Charles Schwab. And I'm getting all this information from our website. You can go to our website and you can easily find this information. You can just do a search on the top right-hand corner. Here's a specific link to the Schwab brokerage account offered by my solo 401k. Take a look at that one there. But back to your question here. So a plan offered by Schwab. So Schwab offers solo 401k plans, but their solo 401k does not come with the $1,500 auto contribution credit, nor does it allow for the mega backdoor Roth strategy, and it doesn't allow for solo 401k participant loans or investing in alternative investments. In other words, it doesn't have all the bells and whistles. However, Schwab will provide a solo 401k plan offered by they'll provide brokerage accounts known as company retirement brokerage accounts for a solo 401k plan offered by my solo 401k financial. Schwab is happy to do that because they make money off of the deposits. And at the same time, they can wash their hands of not having to help with any compliance reporting for your plan or handling the required plan updates for the solo 401k plan. So while Schwab offers their own solo 401k, they'll provide brokerage accounts for a solo 401k offered by my solo 401k financial. And we'll draft those Schwab brokerage forms for you as part of the setup process. So for example, if you use Schwab and you want to be able to make all these different types of contributions, pre-tax, Roth, and voluntary after-tax, for the solo 401k plan, we would draft 3 sets of brokerage forms at Schwab, one for each type of source of funds. If both spouses are in the plan, we would prepare a total of 6 brokerage account forms. We'll then fax those to Schwab for you as part of the setup process. So you don't even have to leave your home or your office to open up the solo 401k from A through Z. When you don't utilize my solo 401k financial and you use Schwab or even, if you use Schwab or even Fidelity, but if you use Schwab, we'll be able to fax those brokerage forms to Schwab for you. Schwab will send you an email letting you know when your accounts are ready. You're going to log in to the Schwab just like you do now with your existing login that you utilize for your personal brokerage accounts and IRAs. And these new brokerage accounts for the solo 401k that we offer will appear on that same screen. So yes, you'll be able to view your Schwab brokerage accounts for the solo 401k that we offer through your existing login that you will use as Schwab, and only you will have access to those funds. Great question. Let's see here. Here we go. I currently use Fidelity. I became dissatisfied with them. For any reason, could I move to Vanguard E-Trade? So if you have a solo 401k with Fidelity, you can restate that plan to my solo 401k financial if you want. And we can help you use Fidelity to hold the brokerage accounts, or Schwab if you want. Unfortunately, Vanguard doesn't provide brokerage accounts for solo 401k plans, for plans offered by outside companies like my solo 401k financial. Vanguard doesn't even offer a solo 401k. E-Trade, I would stay away from. Ever since they merged with Morgan Stanley, they've been horrendous to work with. I've seen them take between 6 to 8 months before they open up brokerage accounts for a solo 401k plan offered by a company like my solo 401k financial. E-Trade offers their own solo 401ks, just like Fidelity and Schwab do, but it may not come with all the bells and whistles like the plan for my solo 401k financial does. So good question. Okay, thanks for clarifying. So if you use Fidelity for the solo 401k brokerage accounts, then yes, we can help you move those brokerage accounts to Schwab. Vanguard doesn't offer them, unfortunately. E-Trade, if you have time, we can help you try to open an E-Trade, the brokerage accounts there. We'll prepare the forms, but I've seen E-Trade take as long as 6 to 8 months to open up those brokerage accounts. But yes, we can gladly help you open them up at E-Trade if you want. Just submit a support ticket and we'll prepare those forms for you. Okay, so looks like we've come to the end. We've been on for over an hour now. So that's it for today's solo 401k session. Thank you so much for investing your time with us. Your time is valuable and your retirement future is worth it. If you haven't yet, please like and subscribe so we can keep building this community. We'll be back here again in a couple hours with more crucial content. Have a good rest of the day in the meantime.